just before we jump into the report, this is what a bear market feels like. And this is specifically what the second half of a bear market feels like. If you haven't been through one before, it might feel like everything's dying. There's no new money coming into the market. Everybody's attention has waned and they've gone off and gone back to their lives and they're not active on Discord anymore. And crypto Twitter is really quiet. These are all things that are indicative of the second half of a bear market. I'm here to tell you that this feeling and this situation will end. This is my third bear market, and every one of them ended. And so it's just it's a constant reminder that like we are in the thick of it right now. But the ability to hold steady and the ability to kind of persevere through just this slog, this like muddy BS that we call the second half of the bear market, that capitulation, it's something that we will get through it. It's just you have to go through it. There's no skipping it. There's no fast forwarding. You just kind of have to make it through, and that's what we're doing right now. The good news is we're almost through it. August, September are always bad. Foxy said, it is not cuddly. No, it is not like Craig. It is not a cuddly bear that you want to, spend time with. And it's something that you end up losing a lot of people temporarily. Like people just go off and live their lives. But the key is like Stasis was built for that, right? Like we designed Stasis for people to escape this trudgery of a bear market. I don't even know if that's a word, but I just made it up. And but with that being said, that's how Stasis was designed. So when we started the project, we started it from day one telling people this is a 12 to 18 month process of building the fund, reducing the supply, playing the market cycle to our advantage. That's what we said from day one. That's what we told every single person who came into the server, who asked questions. Every single person. And our narrative has never changed. From the moment we went public on May 15th, we have told each and every person, this is a long investment. There are going to be hard times. There's going to be good times. The market cycle is coming. And here's what you should expect from Stasis. And so the issue that we're finding now is not everybody listened to us. So you can see with the price of the token, temporarily it's been down under pre-sale price because not everybody listened. So we gave disclaimer after disclaimer. This is a long-term investment. Set your dynamic strategies. Go touch grass. Give us 12 to 18 months to build the fund, play the market cycle, enhance that return through the market cycle movements. Unfortunately, not everybody listened. Some people probably overexposed themselves to the token, which left them less capital to be able to invest in other things. So they sell Stasis to go invest. That's fine. Other people just thought it was going to be a quick flip and they were going to get it 3-4x in a couple weeks and then they could move on. That's a perfectly good strategy, mostly in DeFi, but not with Stasis. And we told everybody that from the day we started. And so what's happening now is, for example, yesterday, somebody sold 1 million tokens, which represented about 1.33% of the circulating supply. And they sold those tokens at a 40% realized loss. That is painful for them, and I feel for them. However, it's good for the protocol and it's good for the long-term holders because them selling now is better for the protocol than them selling at a 50% profit in, say, 6 months. And that comes down to expectations management. That's why we talked at the beginning. Only put 10-20% of your portfolio into Stasis, something you're comfortable holding for 12 to 18 months, something that you are comfortable being committed to without feeling like you're stuck. That was the narrative from the moment we went public to now, and it's never changed. And so you have individuals making decisions that if we're not careful in how we judge those decisions, it can reflect on the protocol. When the truth is, the protocol is healthy. There appears to be no issues with the contracts. We have some UI bugs in the DApp that we're still ironing out, but those are just display issues. The team is healthy. The DeFi fund is healthy. No money has gone missing. We haven't had any like $0 write-offs, as in we lost all of that money. None of that has happened. And so there's no acute reason for people to be quote unquote abandoning ship. However, again, we can't control individual decisions. We can only control the performance and procedures of the protocol. And from our perspective, the protocol is healthy despite the fact that the market has contracted over the past month. And so it's just something that I felt like we need to address because without understanding the narrative, you could go, well, that protocol is failing. The protocol is fine. It's not failing. The individuals choosing to sell at a loss, that's their individual decision, but it doesn't reflect on the protocol because the protocol remains operational. The team is doing just fine. The DeFi fund is healthy and intact. And frankly, at this point, now we're over collateralized again. So, which is for us a good thing because we can move forward confidently and take care of the users that remain within the protocol and take care of the DeFi fund. So that's the plan. It's nothing to panic about. It's nothing to get upset about if you're here long term, because we have a very distinct 12 to 18 month plan to take full advantage of this market cycle and then move forward through that. And so far, if you had listened to me in May and June, I told you August and September were going to be like this, and they ended up being like this. So it comes down to a level of trust and experience, and we want to make sure that we keep pushing forward and not get stuck in this negative victim mindset when we can clearly navigate these market cycles together. So it's just something that we need to keep in mind. Michael, you got anything to add there?
I don't. That was all very well said. I'm gonna try and share my screen now. See how this goes.
Oh, can you?
While I'm simultaneously recording.
I don't believe it. I don't know if you can actually do it. Trent, thank you. I did make up a hybrid word.
We will see
Treasury.
how this goes. Is it streaming?
I can see it.
Perfect.
I can see it.
Great. Okay, everyone.
Now you don't have to tell me to scroll while you talk awkwardly while I'm distracted, like last month.
So yeah, let's dive into the DeFi fund. So obviously August was not a great month for the markets. Over the course of the month from start to finish, you saw ETH down about almost 15%, Bitcoin down almost 16%. And that kind of ties into the ethos of the DeFi fund, and that is that we have significant beta exposure to the markets because we want that. Because the plan, like Patrick said, is 12 to 18 month forward looking. It's a very long biased portfolio. We want that we want that underlying beta exposure. We want to move with the assets as they navigate and find their value and find their price. It's just the caveat with that is that when the market is down, the fund will be down just by virtue of how it functions. That being said, this is where the high yielding aspect of the portfolio comes into play. We are still experiencing significant yield. And we're using that yield continually to buy back into the assets, to DCA into those positions. And as a result, while the market may have been down over 15%, we saw about 10.5% drop in the fund. or the notional dollar value of the fund, I should say, which means we functionally outperform the market by about 4%. And I know at face value that doesn't sound appealing or that great, but for us, it's important that that yield and these positions are contributing to outperforming the market. And again, that we have that exposure, because the flip side of this is when, macro conditions change, when we start to really exit the bear market and transition into the bull market, we will be in a very prime position to capitalize on that, because we've been redeploying into these positions, because we've been generating that yield. When things turn around, they will turn around. And while we're having down months now during this contractionary period, as we're trudging along laterally or downward, again, you'll see that notional dollar value go down. But trust me, when it turns around and we start entering into this bull market, the gains will be exponential and very disproportionate, which is how we've designed the fund. So everything, it's a hard thing optics wise and psychology wise. Nobody wants to see a down month. Nobody wants to see the notional dollar value go down. But that is the flip side to having underlying asset exposure in a bear market. It happens.
Yeah, that also is like, it plays back to our TradFi narrative that we started with at the beginning. Is like, if you were to look at a mutual fund or ETF that you're invested in the stock market or whatever it might be, it's no different. If the overall market contracts, your value in that specific instrument will contract. And so the key for us is timing. We timed the launch and the investments what we deem to be near bottom. And so while we have high beta exposure, we made a calculated decision that beta exposure has far more upside than it does downside. That's how, as a trader, you make those decisions. Like, what's my potential loss? Where's my stop loss at? Whether it's 3%, 5%, 10%, but where's my take profit at? And you enter into positions where you are making an educated guess through your experience and your analysis that the upside is 5, 10, 15 times higher than your downside. And so that level of confidence in where the positions will eventually move over the next 12 and 18 months. But again, it's a double-edged sword, like Michael's saying. You have a situation where Bitcoin contracted almost 16% in the month of August. August is like that, but we beat that market contraction between yields and our assets that we're holding by 4.5%. And we will continue to do so, because right now what we're doing, most of the yield that we're earning is being compounded back into the fund. So there is that compound effect that is happening right now. And there's really no reason for us to change that strategy, especially when the opportunities are better at a lower price point when we're DCAing into these projects or into these assets at a low price. And so that's just the nature of the whole market, and so that's kind of where we are when it comes to how we align with market movements.
Yeah, and the other thing to take into account too is when these reports come out and we share this data, I'm capturing it on the last day of the month. And even day to day, these figures are going to be wildly different. Had I captured the data yesterday, it'd be a very, very different picture in terms of, notional dollar value. And that's why I like to stress as much as I can, don't get hung up on changes in notional dollar value, because it is going to fluctuate wildly even day to day. The important aspect, and I'll keep hammering it home, is that the fund is generating yield. The yield is being used to compound and redeploy into positions. We're outperforming the general market, and we're positioning ourselves so that when it does turn around, we're going to see disproportionate and exponential gains. That being said, moving on to some of the specifics of the portfolio itself. We were in a TBTC WETH position on Gamma. We ended up shifting out of that to a TBTC WBTC position on Curve. the logic behind that was just going for straight single asset exposure, eliminating impermanent loss. After we earned some yield on that, we actually made the choice to redeploy away from Bitcoin entirely. Nothing against Bitcoin. We just felt that the capital was more efficient, redeployed to some other positions that had a higher potential upside. Though that redeployment will be reflected in next month's report, since we did that this week. Additionally, the portion of the fund that we had in a ETH ARB pool, we took part of that and redeployed it into a KyberSwap concentrated pool. KyberSwap had a little bit more aggressive yield, so we figured we'd stick a little bit of that position there. We also rearranged that position. So prior to that, we were getting roughly 12 to 15%. I think as of yesterday, when I last looked, the uni position is now at about 35%, and the KyberSwap position is about 45%. So, that just ties into the fact that I wanted to highlight that every day we're looking at the fund. We're always hunting for better yield opportunities. We're always looking for ways to optimize and make it more efficient. So, we're keeping an eye out for those opportunities and redeploying as we see them pop up. A couple pools in general were rearranged, rebalanced. Additionally, when we were over collateralized there for a couple weeks, we withdrew roughly 5 ETH from our real yield ETH position to acquire some of that excess supply off the market. One of the impressive aspects that I've honestly been a little bit surprised by in the most pleasant of ways, STS Plus, the APA, has held steady. I think it was 49.5% the prior month and 49% last month. It's a great place to take profit into if you have your dynamic strategy set. Always encourage a portion to be set to take profit. The APA on STS Plus is insane. I'm very happy that that's held up. And then lastly, it's not reflected in this report since I believe we did it on the 1st or 2nd. But we took the stables we had allocated to the fractional strategy on Sommelier and actually redeployed that into a Curve 4 pool on Base, which was exciting because that was our first investment on the Base network. So with that being said, this is the breakdown of the fund as of the 31st of August. Again, I know that number is going to be scary.
I mean, it's really not that scary.
It's not that scary.
It's not. I mean, the key there, and I think this is a little bit of DeFi PTSD, is like if the number is negative, we have a problem. And in DeFi, that can usually be true. But because we are modeled off of TradFi instruments and we are modeled off of a fund management overall structure, it shouldn't be that scary. I think most of our users are pretty well informed at this point when it comes to the fund itself, and I think ultimately the negative, it's not a bad thing if it's negative. It is bad if that negative is caused by mismanagement of funds or funds disappearing or funds being lost. But if it's negative just because market contraction, that's just what happens in a crabby market, that's not bad. That's just the nature of the circumstance. And so I think the PTSD of our experiences is going, oh no, it's down, where in actuality, from a unit standpoint, we have been compounding. So our asset counts, not counting the fiat value are up, but the dollar value is down.
Yeah. Again, just want to echo, notional dollar value is one thing. They're not realized losses. It's just the market's down. So like Patrick said, notional dollar value down, asset count up. At the end of the day, the overwhelming significant majority of the DeFi fund's portfolio is in blue chip assets. They're assets that aren't going anywhere. They're assets that, if or not if, when the market turns around, they will ride with the market back up. We're in a few small cap things like Pika or MDB, but those comprise such a small portion of the portfolio. And it was also important to us to have a couple assets, a small portion, dedicated to very small cap tokens that had a significant upside potential, because you have to have one or two there to capitalize on, when the bull market comes back around, you'll see crazy returns on some of these smaller assets. But
yeah, that's an important point, because we got that question during pre-sale is like, are you going to be investing in micro cap DeFi projects, pre-sales, stuff like that? And my answer at that time was emphatically no. However, I did say at some point the market will dictate that we throw a little bit of money into certain pre-sales when we hit that euphoria stage, when there's a certain point within the bull market. It doesn't last very long. It's about 6 months long, 4 to 6 months long, where you can throw money at literally anything, and if you time it right, you can make anywhere from 2 to 10x almost instantly. And those are the times where we could be justified to take a small portion of the fund and make those plays. Obviously, that's well up the risk curve from where we are now, but there would be a justification there at that point. However, Pika is small cap, in micro cap technically, but it has a strong team, has a strong backing. The tokenomics are good, and it's just a matter of like waiting for that particular protocol to build out a bigger user base and a bit more traction. And we think that one could easily, 5 or 10x its market cap in a very short amount of time, with just the right amount of hype and series of events. So everything we're doing is speculation, right? We're speculating on the market cycle. We're speculating on specific assets. And that's one of them that the market cap might be lower, but ultimately the upside is incredibly high if the things that we think are going to be happening with that particular protocol actually happen.
Yeah, and overall, just the health and outlook of the assets that comprise the portfolio. There's nothing in here that is giving us any sort of pause or concern. The actual assets that make up the portfolio, we feel great about. Whether that's FXS or SOM or Stater or Lido or Optimism, ARB, GMX. Again, the overwhelming majority of the portfolio is comprised of these essentially blue chip assets. So that's why, Patrick and I aren't panicked in any way. We're not worried in any way. This is a drawdown month, but again, as Patrick's been saying for months, September, October, especially September, not a great month for crypto.
Well, if you look at the historical, like monthly, I can actually even pull it up. In the 13 years that crypto has been a thing, September has had only 2 green months. And however, October has only had 2 red months. So September is the worst month of the year for crypto, and October and February, surprisingly, are the two best months for crypto. So it's something that, at the end of the day, history informs the present and the future to some capacity, and so we had a pretty good sense that August and September would be red. I do have this tickle in the back of my head called intuition that September might end up being slightly green. I could be wrong, likely to be wrong, but I just have the sense that it might happen. We might get surprised by it, but the expectation is that it's going to be a slightly red month, just like February or August was a slightly red month. So it is something that you anticipate as you go through the years and you go through the cycles. You kind of just anticipate. The numbers say we should expect a red month, and the numbers say we should expect a green month. And so, but that's just the nature of this market. And if you're a long time holder, if you're a long term crypto investor, you're here for all of it, and you just kind of make your decisions from a portfolio standpoint based on the information you have available to you.
Yeah. So this is just reflecting a breakdown of the portfolio in terms of how assets are allocated across it. As mentioned, obviously the two biggest positions we have are the real yield ETH exposure on Sommelier, as well as the Fraximal position, which is our stables position. Again, that Fraximal position has been redeployed. We did so, one, just because the yield on it had tapered off to a threshold where we felt we could do better, but also just to minimize the amount of single smart contract exposure that we had. So that's been moved over to Curve on Base, as mentioned, into that 4 pool. Currently, the yield on that as of yesterday, when I was looking at it, was around 15%, which is great. Obviously, that's not going to last. 15% on a pure stables position is fantastic, but typically short-lived. So when that runs its course and we feel that we can find better yield elsewhere, we'll find somewhere else to park it. That being said, looking at the rest of the assets, it's a relatively normal distribution. Again, as we kind of get into the more small micro cap, you'll see the allocation percentage or ratio drop. When we're looking at things like Pika or MDB, those are going to be a very small portion of the portfolio. Even though prior to this month, Pendle was around, but it wasn't huge. It's since seen a lovely amount of growth. It was actually one of our better performing positions in the portfolio, thanks to a nice tweet by Binance that helped pump it. But again, that comes back to a lot of the assets in the portfolio. They may be down 1 month, and then CZ decides to send out one tweet, and all of a sudden, you've 5x'd on a single portion of your portfolio.
Yeah. Well, and that comment right there is actually indicative of the way Stasis is structured. Like, it's constant management. Like, you and I talk every day about something within the fund, and that means we have eyes on the fund every day. So if something major were to happen, let's say, for example, just theoretically, we have single staking FXS, and theoretically, at some point in the next 3 months, if FXS were to go hyperbolic, like 10x for some reason, some major news, hype trains flowing, because we're looking at the fund every day, because we're optimizing it and managing it, or at least strategizing about it every day, that would be an opportunity for us to go, all right, exit that position for the moment. Like, take profit, let it cool off, and then we will re-enter when we think if we think that the asset has more room to grow, and we think this is a new place to re-enter. That's kind of the beauty of this pool in our structure, is because we're actively looking at it and managing it every day. Each individual position can be optimized on a daily basis depending on the market structure. So that's the strength of how we're operating the DeFi fund overall.
Yeah, everything's flexible. Nothing we're invested into is vested or escrowed or locked in any capacity. Um, we're very fluid with how we can adapt the portfolio and how it needs to be done. And the case in point is just that stables allocation, or what we navigated with Bitcoin the last month. We're always looking for better yield bearing opportunities. We're always looking for stronger investment opportunities, and we're constantly adjusting and tweaking to make sure that we're as optimized and efficient as we possibly can be with the fund.
Bert asked, did we buy any L1X in private pre-sale? No, we did not. That goes back to what I said about new protocols and pre-sales. Right now, while the tech appears to be working properly and everything seems to be moving ahead as planned with them, and we wish them well. Personal investment strategy, I might have put money into the private or public sales for them, but I wouldn't have done it with the DeFi fund. We had a very strong and structured narrative when it comes to risk management for the fund, and that did not include pre-sales or new protocols launching at this time in the market. It's just from our calculations on a risk curve, new doesn't always mean better in a bear market. So we had to make sure that we were sticking to that and we were consistent with that decision-making process.
Moving along here. So this top table represents just operational balances in the wallet. If you wanted to have a synonym for it, it'd be quote unquote loose change.
That's couch money, baby.
It's couch money. So this is the fund's couch money. Essentially, when we compound back into pools or move money around, sometimes there's a little bit left over. So this section is mostly just those leftover assets spread across the different chains. Those will fluctuate on a daily or weekly basis. But again, with these reports, we just want to be very comprehensive, show you guys where everything is at any given point in time. The table below that, the metrics, is just a summary of what we had on the other page, just reflecting total values. No, nothing new there. Moving on from that, this is going to essentially show the breakdown of the entire treasury. So you'll see the represented DeFi fund, various operational balances, what we have in terms of the liquidity pools. I would say, I don't know if there's anything too many notes of interest on this page in particular.
No, we haven't had a need to rebalance anything or move anything around. So, it's
No, nothing of too much interest. I always like this page. This is a composition of the treasury. I like to think of it as our capital efficiency page. The goal is always to try and make sure that we are being as efficient as possible and that we're making sure that the fund is getting the capital and the resources that it needs to do what it needs to do. That being said, we'll always make sure that the LPs are sufficiently liquid. And, we're flexible there in terms of when we pull out of or put more into the farms. But you can see from a treasury standpoint, there is no waste. Any capital the protocol owns is either in liquidity or the DeFi fund. We maintain a very, very small operational balance because we've minimized monthly expenditures. We don't need to carry a large operational balance. So money is always working within the protocol.
add those numbers up. 98.2% of any capital in the protocol is in the protocol, either in the fund or in the liquidity pools.
This is functionally the same table up above, but excluding the DeFi Fund. Same information here, a little bit more of a breakdown in terms of actual quantity of each individual asset. That being said, I should probably rework this. A P&L table or a P&L column doesn't necessarily make sense. This isn't profit and loss. It's just how money has moved around. But yeah, if you are interested in kind of the minutia of the fluctuations in the liquidity pools or the various operational balances held by the multi-sig or our operations wallet, you can consult this page here, and it gives a little more specific breakdown.
Even that page is more due to market contraction, right?
Yeah.
Just the USD value is down. Yeah,
Yeah.
So not much changed.
No, nothing's really moved. I mean, again, if you look at the beginning versus end of month asset balances, aside from some of the specific operational tokens, nothing's really changed. Like the LP and the farm balances haven't changed. It's just notional dollar value. So
right.
nothing crazy happened. We didn't really move anything around on the back end of the protocol.
Cool.
So this is our metrics page. Kind of just gives you a quick snapshot, comparing start of month versus end of month for different ratios. The one on this page that I always kind of draw attention to are going to be the backing ratios. You'll see that they're consistent in terms of regardless of what's going on in the protocol, what's going on in the broader markets. As I mentioned prior, we always want to make sure that the liquidity pools are sufficiently liquid so people can transact and flow in and out as needed. So those are ratios that we strive to maintain and make sure to maintain. So those will be your line items 6 through 8 there. Aside from that, the single staking APY has come down a little. The farm APYs have come down, which we knew they were going to come down.
Actually, farms are right. So the farm APY is right. I was talking with the devs yesterday. We found a bug in the single staking APY. As of yesterday, it was actually 12%. So, so that is an error that we're fixing. It happens every once in a while. On testnet, on the DApp, the number's right. But on the production DApp that's live, it's wrong. So there's a statistical bleed happening somewhere in the math. So we just have to find it and fix it. Because I noticed, the farm APYs since the start of the month have settled into a range between like 50 and 70%. But the staking APY had been precipitously dropping this whole time. And so we had been investigating and found the error. So now we're just fixing it. But it actually, the staking APY is whatever it's saying on the DApp that's wrong. It's actually like somewhere between 10 and 12% right now. So happy days for that. It's just again, that's one of those display errors that I mentioned at the beginning that we have that we're fixing.
Yeah, the farm APY is still holding up incredibly strong. I think our initial projection was something like 40%. So still well above that. Looks like they're settling in. But again, the big winner is STS Plus. APA is holding consistent. 49% is very far beyond our initial projections of what STS APA would look like. So that's great to see. It's been a fantastic vehicle. I know I've been utilizing it personally. Very happy to kind of see that that's held up at a higher APA for a longer period of time. Moving over to the token supply. It's a little bit complicated right now just between our progressive launch with the horde boxes and also the massive amount of burning that we're doing of the non-circulating supply. In August, we burned over 27 million cumulative tokens. That's a combination of both the circulating supply and non-circulating supply. And Patrick, maybe you can speak a little more to the plans of the timeline when it comes to burning that non-circulating supply.
Yeah. So we have, I think, if I remember correctly, 127 million more tokens in non-circulating. The 116 million. So the plan was, after we finished the horde boxes, which everybody really enjoyed, we were going to burn a majority of the remaining non-circulating supply. I don't know what the leftover is going to be. I don't know how much I want to hold on to specifically. But we started with 168 million tokens. Now we're down to 116. And so the plan is to destroy those tokens. We don't need them anymore. And so what you're going to see is on the listing pages, so like CoinMarketCap, CoinGecko, and the DApp front page, the token market cap, you're going to see that keep going down. It doesn't mean the project's losing value. It just means that the amount of tokens that exist on the contract are being reduced. So those services and the DApp read the amount of total tokens that exist in the protocol, and then it makes a calculation off of the token price, right? So if we're burning, 10 million tokens twice a week, that number is going to come down. So on this page on the DeFi Fund report, number one on both sides, FDV, market capitalization, and total FD token supply, those numbers are going to keep decreasing precipitously over the next month, 2 months, because we're going to keep burning supply. And so what's happening functionally is we're taking 10 million tokens. 9 million is being destroyed. 1 million is going into the NFT contract. That contract is locked supply. And what that is doing is that's slightly boosting NFT payouts for holders each time that we deposit tokens. And so those tokens are non-circulating. They are locked in the contract. If someone want to access those tokens, they have to redeem their NFT for a 20% redemption fee. And so short term, that's not a lucrative decision. Redemption was designed for somebody who needed emergency access to that capital without feeling like they were locked into an NFT. But the more tokens we put into the contract, the more lifetime backing value each NFT has. So right now, with 150 NFTs minted, someone did the math the other day. Right now, with 150 NFTs minted, each NFT's backing tokens is like 180,000 STS tokens. So instead of flipping them or redeeming them, if you were just to hold them for the lifetime of the NFT, it's even at just pre-sale price, that's 3 times the value that's available to those 150 NFTs. Now, naturally, we want to open up NFT mint again later once the market dictates it. There's no reason to rush it into that. If everybody's still clutching their pearls, there's no reason to rush into a new NFT mint. However, NFT holders are benefiting greatly due to this drawdown on excess tokens. And it's just the numbers are going to look weird for FDV and token supply, because the whole point of the protocol is to run a tight ship. Any excess tokens that we have that we don't anticipate needing in the near future, we anticipate burning. And so at the end of the day, it's our very simple philosophy: grow the fund, reduce the supply. And so these numbers will continue to change month after month within the report, but it's important to know why.
Yeah, I think that was a fantastic breakdown. Um, Outside of that, we always pride ourselves on transparency and communication with you guys. All relevant wallet addresses will always be in these reports. You can plug them into DBank, you can plug them into whatever site of your choosing. You can see exactly where everything is at any given point in time, what it's doing, how it's performing. Nothing is hidden. You can verify everything that's in the report. Uh, again, just 100% transparency. Those wallet addresses are there for you guys anytime you want to check in on them. And with that, I think that's everything from the monthly report.
Yep. Yeah. Every time we have, every time we have a decent sized sell off, STS Plus's APA pumps. So every time somebody sells, everybody who's holding STS Plus is celebrating. I'm like, stop celebrating.
Yes, I'm very happy with my STS Plus holdings.
Yeah, everybody who's holding STS Plus is ecstatic every time. I think yesterday alone it jumped almost 6% yesterday alone. Like it increased. It's like I think it went from 10.6 cents to 10.64 cents. So what is that? Yeah, that's like
it's a number.
It's a number. It's a number that went up. That's all people really care about. See, we're falling into that DeFi mindset. Did the number go up? Good. Well, with that, I think we're pretty much covered. Like I said at the beginning, just to circle back to what I said when we started, the fund is healthy. There's been no write-offs or losses. There's been no realized losses. We're just in a crabby market, and that's what's happening. But at the end of the day, every week, every month, we're making progress on the fund, and the people who want to be here long term are here. People who don't are exiting the project. That will hurt short term. But we're not a short-term project. We're not a short-term team. We just don't view it that way. And so we have a very clear plan from now until Q4 2025 and on about what things are going to look like. And we appreciate everybody being patient. People who are DCAing in now, obviously the token price is much more attractive. So if you have an opportunity to DCA in, it's not a bad situation. I always tell people, don't overexpose yourself. Don't over allocate what you can't afford to hold for a while. Things aren't going to be, skyrocketing tomorrow, but we will be playing the market as the market gives us opportunities, and we'll make the most of them over the next, year and a half as we move through this cycle. Other than that, I mean, the fund is healthy, and we move forward. Michael, awesome. Any famous last words?
No, I don't think I have any famous last words. Just to reiterate, again, no one on the team is panicked or worried. I'm
panicked, but it's because I can't see what my cats are doing.
Related to the fund and the protocol, no one on the team is panicked or worried.
I can hear them, I can't see them, and that bothers me.
That being said, like I don't want to minimize the psychology of the price action of the token. I am a personal investor in this and many other things as well. Obviously, you never want to see the number on the chart go down or the number in your portfolio go down, and it's always a concern when that happens. It's something we're aware of. I don't want any investors to think that, we're not paying attention to the price action of the token. We are. Obviously, we don't want it to go down, but we also have to prioritize and frame it from the perspective of the protocol and making sure that we're using the capital that we have efficiently and responsibly. The time will come when markets give us the opportunity to do massive buybacks, to, you know, pump the value, to move that price action the other direction. That just isn't right now, and it would be irresponsible of us to pull money from the fund or the treasury to do that while we're still in a bear market, while we're still trudging along laterally or downward. It's just not the time for it. Again, you know, this is why we always advocated that this is a long-term investment, because right now, while markets are down, the best thing we can do with the fund and that capital is to be growing the fund, to be acquiring assets, to be positioning ourselves so that we can fully capitalize on the bull market when it comes. And you know, I know, again, that's difficult as an investor or a holder, seeing that happen on the chart and watching that price action. But if you are here for the longer term, you'll be well rewarded for your patience.
Yeah, ultimately you just have to ask yourself, is it due to something systemic or is it something external? And in our case, 100% of the price action is external, either Matic being Matic, which is very schizophrenic when it comes to volatility, or just individuals choosing to move on. You know, and those external variables we can't control, but we can mitigate their impact by just making sure that everything else that we are in control of is healthy. Cool. All right. We're going to wrap this up. We're almost at an hour. I'm giving $25 in STS to Foxy85 because she asked some good questions.
Let's go, Foxy.
All right. Let's go, Foxy. We will be posting the DeFi Fund shortly, for you to review. Michael's going to get this recording on YouTube for anyone who could not attend. Thank you, everybody, for being here. Look forward to the next month. Personally, looking forward to September being over because I want to see some green months and I want to see some green candles, and we would love to be able to translate some of the value that's being built within the DeFi Fund over to the users. So I'm looking forward to those days where people are celebrating what the candles in charts look like, because those are the good days of crypto. These right now, not so good, but we'll make through it. We'll persevere. Cool. All right, Michael, let's wrap this up. And we will talk to everybody soon.
Thank you, everyone.